Okay, folks, interest rate decision today. The implications of the steady interest rates for the Fife homeowners is what we're going to talk about. The full article's on here. But basically, the Bank of England has held interest rates at 5.25% for the second consecutive time. I mean, this decision's welcomed by many, especially hints of a semblance of stability for homeowners and prospective buyers in Fife. The widely anticipated move came on the heels of September's inflation figures, which actually remained steady at 6.7%, alleviating some of the pressure of the bank's Monetary Policy Committee. It, the vote to maintain the rate was a majority, 63, which is really good news actually, because sometimes it's borderline, but a majority of 63 is quite encouraging because then that means there's going to be something substantial to happen next month or in the next month for it to change the following month. And the very fact that 63 are now saying, which is a quite a big majority, two-thirds actually, they want to keep rates on hold, indicates a cautious approach towards any further interest rate hikes amidst the economic conditions. So this hold on interest rates brings a sigh of relief to about 2.2 million homeowners on variable rate mortgages who have been navigating through the rising tide of interest rates since December 2021. The average standard variable rate has soared from 4.4% to 8.2% over the past 2 years, making the current pause in rate hikes a breather for many. If you're on a standard variable rate right now, you probably need to go and speak to a financial advisor or a mortgage broker. Well, mortgage broker ideally, in order to see if there's a rate that you can fix on that will give you some certainty at this point in time, especially if you're paying round about 8.2%. Now, it might be circumstances outside of your control, which you think are outside of your control, which means you've possibly got poor credit. You've possibly got a high loan to value. But these are all things that mortgage brokers will have the answer to. So rather than actually make a decision based on what you think you know and basically what would effectively be my limited knowledge, then go and speak to a mortgage broker who has a huge width of knowledge on this and able to give you the right decision based on facts rather than what you think is your opinion at this point in time. So please don't make any assumptions if you're on a variable rate. Get the expert advice of a mortgage broker. Now, if you don't have a mortgage broker or you're looking for a mortgage broker, we're more than happy to refer you to the right people at that point in time. So all you need to do is just send us basically send us a message on this post with your details, pass it on to the mortgage broker. They'll get in touch with you, and then they can go over some details and maybe a telephone conversation or a Zoom call or a Teams or anything like that in the beginning, just to give you a rough idea. Remember, you're not wasting their time because there's a strong possibility they might actually be able to get you a better rate and better circumstances for you for your mortgage at this point in time, because you're sitting at probably 8.2% on variable rate just now. Now, we've got to remember, though, however, many experts advise homeowners on standard variable rates. Again, as I said, to explore more economical options and to switching to better mortgage deals. So definitely consider that. The steadiness of interest rates also signals a respite for those eyeing new mortgage deals. Recent times have seen a dip in mortgage rates, reflecting a competitive market scenario. Notably, the best 2 year fixed rates have dropped by 1 whole percentage point over the past 2 months. Additionally, more 5 year fixed rate deals are now available below 5%, which alongside the rate hold, it could be indicating a phase of market stabilization, which is really good news. Now, interestingly enough, when I say there's 5 year fixed rate deals now below 5%, just assume it's 5% and you're at 8.2 just now, you're basically 3.2. Now, if your mortgage is 100,000, then by 3.2, you're literally saving £3,200 a year for every 100,000 you've got. If your mortgage is 400,000 and you're on a variable rate 8.2 and your base rate was 5%, you're literally saving yourself possibly 12,800 a year. For some people, that's half their salary just in savings in a mortgage on switching your rates. So you can see how important it is for people on standard variable rate to really explore their options of possibly fixing the rate or getting a better rate overall, just in general. Maybe a 2-year rate deal, maybe a tracker deal. It doesn't matter what it is. The mortgage broker should be able to advise you of that. But you can see these numbers there, even 3,200. When was the last time you were given 3,200? Who was ever given a pay rise of 3,200, let alone 12,000 and odd for a year? Because that's effectively what you're doing if you're going from standard variable rate to fixing your mortgage. You're giving yourself a huge boost in your economic money every single month, your cash flow. And so I can't impress enough how important it is to speak to a mortgage broker. If you know anybody that's actually in this position as well, or have got a mortgage, which is most people, then by all means, tag them in this post or share it with them. Share it with them privately if you don't want to tag them publicly. Just as long as they get this information, because it could do them a lot of good, especially when we're coming up to winter and Christmas, where all the big budget is in terms of buying presents and everything like that, and then the costs and the heating bills as well. So it's more important to actually look at your mortgage position right now and see if there is something you can save on. Okay, so the steadiness in interest rate rises also signals respite for people on new mortgage deals, as I said. Recent times have seen a dip in the mortgage rates, reflecting competitive market scenario, and this could be a phased stabilisation. Despite the short-term relief, the bank's cautious stance resonates with the unpredictable nature of economic conditions, especially with the potential upside risks to inflation of the global scenarios, such as events in the Middle East, for example. The bank's wait and see mode reflects a prudent approach towards any further tightening of monetary policy. Now, as a seasoned Fife estate agent, we're exploring these market dynamics extensively in our articles on the Fife property market you see every single week. And you can see most of them when you go into our website and just click on the vlog, and you'll see all the articles in there. And you'll see the most recent ones when we talk about economic activity, especially with things like, salary levels are getting agreed at 7.4% just now, which is above inflation of 6.7. Economic unemployment itself is sitting around about 4.2%, which is still a full employment level in terms of economic terms. And all that it means is we're still chasing desired skills and possibly poaching from other people, from employer to employer. Then, therefore, I envisage that salaries will still continue to rise in order to retain or attract new employees or existing employees. So we're exploring these dynamics every single week. Understanding these financial nuances is crucial for making informed decisions, remember. Whether you're considering buying, selling, or holding onto your property, if you're contemplating a move or curious about the current market value of your home, we're actually offering the appraisals of your property anyway. And, we do this all the time, day in, day out. And often on some of the occasions, we get to the point where we decide between giving and deliver on the facts that the seller says at this point in time is probably not the best time for them to sell, or it might be at this point in time, this is probably the best time for you to sell. But it's the seller that decides that. But you don't know what you don't know. So the most important point is get the facts first before you make a decision based on assumptions and opinion of others who have no idea what the property market is doing, because they're not in it and they don't work in it every day. So, as I said, stay informed about diving into a series of articles or reach out for our personalised market appraisals, as I said before, of your Fife home to navigate these steady waters of the current property market by contacting our local offices. So there's a link in this post to contact local offices. If you want to speak to us direct, you can message us direct, or you can call us on any of the office numbers. Quickly, one off the top of my head is 01334 65 42 21. Until next time, guys, I'm Jim Parker for Fife Properties TV. Bye-bye for now.